everyone. Welcome back to another episode of the Finish Line podcast. Today, we're diving into a topic so many people silently struggle with, but rarely talk about. Debt is stressful, especially when you're trying to keep your home or become mortgage ready again. Key from MNP is joining us today to break down the truth about consumer proposal and bankruptcy and how you can rebuild. If you're looking for clarity, direction, and a real path forward, this episode is for you. And with that, Key, I'll pass the floor to you.
Thank you, Vina. So my name is Key from MNP. I've been in the insolvency industry for almost 10 years. I've helped over 4,000 clients find a solution for their financial freedom. So we offer consumer proposals and bankruptcies. We also help with getting their finances in order, along with getting your credit back up, things like that.
4,000 people, that's an accomplishment of how many people you've actually helped. And, you know, debt is, like I said, debt is very stressful, right? So that's huge help to many that are seeking that sort of freedom because debt can affect many parts of your life, right? Whether it be
Yeah,
mental and all that stuff.
for sure.
For anyone who's listening and who's never dealt with insolvency here, what exactly do you do and when should someone reach out to you?
Let's start off with licensed insolvency trustees. So we're the federally regulated professionals who can legally administer a bankruptcy or a consumer proposal in Canada. So what that means is that you can't go to anyone else who is not licensed. So it's only trustees who can file a bankruptcy or a consumer proposal for you.
So you actually have to be licensed, right?
Exactly.
And are there other people in this industry that do it like you or
So there are other, I would say, other companies, other individuals who do this as a side business, but it is illegal. So the only way you can get an insolvency file, like a bankruptcy or a consumer proposal, is through a licensed insolvency trustee.
got it? What is the difference between a consumer proposal and bankruptcy?
So let's start off with the consumer proposal. So consumer proposal is pretty much like a payment plan. It's over the course of 5 years, so 60 months. You're not necessarily paying back your debts in full. You pay back a certain percentage on the dollar value. So this can change based on each client. Versus a bankruptcy is more of just you just pay our fees in a bankruptcy unless you have assets that are over the exemption that the government sets. So for example, like in a bankruptcy, I would normally recommend that to those that are on like fixed income, pension, ODSP, people like that, versus proposal is more referred to people who are on like who own homes, who want to keep their credit in a good standing, but just cannot pay the debt in full.
Those two terms are often used interchangeably as synonyms, right? Like they're
Yes.
synonymous to one another. Um, my understanding from our recent presentation from you is that consultations are always free and confidential. I mean, I would assume things like this are confidential, but what are the fees if someone decides to move forward? So they have a consultation with you. That part is free,
Yeah.
but what if they decide to proceed with the CP or bankruptcy?
So consultations are free and confidential. So whatever you say to us and whatever we speak to you stays within the room. So honestly, from that point, it's up to you if you do want to file a consumer proposal or a bankruptcy, or you don't even need to do anything about it. So our fees are for the first time bankruptcy is $1,800. Second time and third time, it differs based on how long, if you what your assets are based on what your income is. A standard consumer proposal we offer is $100 over 60 months. So you're pretty much paying back $6,000 over the course of 5 years. But this can differ based on each client and what their assets are.
And none of these are obviously upfront costs like you mentioned. So
No. So
so
our fees are pretty much rolled into your proposal payments and bankruptcy payments. So we don't take anything out separately.
that's also a good fact to know because money is always the reason
And
why people are into this. So
exactly.
they when consultations or when extra services add more dollar amount to that debt, people get a little spooked, right?
Yes.
One question I get asked all the time is if you go bankrupt or do a consumer proposal, do you actually lose your home?
Yes and no. So in a consumer proposal, your assets are protected as long as you're paying back more than what the equity is in your property. Or if there's no equity in the property, as long as you're paying back a certain percentage on the dollar value. In a bankruptcy, if you did have significant equity, I would not recommend that option for you, just because in a bankruptcy, your assets do vest with us. So what that means is that if you had a house with, like, let's say $100,000 worth of equity, you do have to buy that back if you wanted to keep your property in a bankruptcy. So in a bankruptcy, you don't you don't really lose your house. It's just that your assets do vest with us. In a consumer proposal, your assets are protected as long as you're making the payments that are greater than the equity.
So what do you mean when you say you don't really lose your property, but it vests with you? So what does that mean to the average general public?
So what that means is that, so if you have a house and there's no equity, then you're fine. You're fine to file a bankruptcy. You can keep your property and everything goes as normal. But let's say you do have equity in your house and you wanted to file a bankruptcy, then you're pretty much going to buy back what the equity value is.
And how would one buy that back?
So we would put you in a payment plan over the course of either 9 months, 21 months, 36 months, depending on how long you're in the bankruptcy for. Or you can refinance your property, borrow money from family and friends to pay off that amount.
When you're on a payment plan to buy this back, does it work like a mortgage? Like is because that payment would, I would assume, would be significant, right?
Yeah, so it would be significant. So that's why we wouldn't really recommend a bankruptcy to people with homes, because the equity would be significantly high. So we would just put them into a payment plan, which sometimes they are able to afford it because it's sometimes maybe it is less than what the bills they are paying on a normal basis. Sometimes people refinance and they go to mortgage brokers like you guys to take out money. So it is done, but I just wouldn't recommend it to someone who has significant equity.
No. How do you determine how much a client would need to pay in a consumer proposal? So I know you said debts are usually consolidated into one payment, percent on a dollar or whatever that is.
Yeah.
But how do you determine that I would pay 20 cents on a dollar, but another client may pay a dollar for dollar?
In a consumer proposal, let's just say you have no assets, and you'd just be making monthly payments. Let's just say of $100 for 60 months, you're going to be paying back $6,000. So we pretty much take your full debt that you have in terms of credit cards, any unsecured creditors, and then we do have a calculator we use where we plug in the numbers versus your income. So if your income is below the threshold for a family of one that the government sets, then we would negotiate like a offer that would work better for you and for the client and for the creditors. But let's just say where we can't negotiate and you can't make more than what the creditors are coming back and asking, then at that point you have the option of withdrawing the proposal and filing a bankruptcy.
So when someone files a bankruptcy and owns a significant amount of equity, right?
Mhm.
What happens to that excess equity in the home? You mentioned that they could buy it back, but if they can't buy it back, then does M&P take that property?
Yeah, so it does vest with us, so we would register on title until you are able to buy that back in a bankruptcy.
So in this case, would the homeowner would still be living in the house?
Yeah,
And then
they
they
would
would
still be
just,
living in the house as long as they can pay back the
and
equity.
if they can't, then they have to.
Yeah, they would have to move and we would go in and sell the property at that point.
Got it.
In a bankruptcy, honestly, there's significant factors that play in losing a property, right? It's not just even a bankruptcy. Like if you're defaulted on your mortgage, your property taxes, things like that. So not necessarily in a bankruptcy you could lose your property, but a property can be lost at any point if you're in default.
Yes.
So
We see, we're seeing quite a bit of that in today's market and stuff like
yeah.
that. So, yeah, you're very right there. How long does a consumer proposal and bankruptcy show on credit bureau after completion? Because I know that there is a timeline, but I've seen mortgages where it's reporting for longer than what it should.
Yeah, so a consumer proposal stays on for a duration of 6 years in total. So the payment plan is over 60 months, which is for 5 years, and then it stays on for an additional extra year after that. So a total of 6 years. But let's say, hey, I have a house and you know what, I'm going to refinance my property in a year from now. So you could pay the proposal off at any point. So the earlier you pay it off, it will come off of your credit report 3 years from that date of your
And
last payment.
for bankruptcies?
So for a bankruptcy for a first time, it is on your credit report for 7 years, and it is an R9, which is one of the worst credit ratings you could possibly have. For a second time bankruptcy, it is on it for 14 years. We don't normally handle third time bankruptcy because we do have to go to court to obtain the approval for that.
And what are the likelihoods of getting that
Um,
approved?
it's the chances are very unlikely. because the court doesn't really like someone filing 3 times because they just seem that it just seems to look like they're abusing the
Yeah,
system.
yeah.
So we turned them down, but there are other trustee offices who do take on third-time bankruptcies.
Well, thanks, Key, for the clarification on that because there's times where I've done deals with consumer proposals, single and double bankruptcy, where it has been reporting on the bureau long after it's been discharged. So I think there's a misconception on the actual time frame
Yeah.
and how long it actually shows on your credit bureau,
Yeah.
right?
So at that point, if they do have the discharge certificate or the full
Yes.
performance, they would have to take that into Equifax or TransUnion and have that rectified.
What are some steps clients should take right away to rebuild their credit? So they file their CP with you or bankruptcy today. What is the first thing that they should focus on right away?
So in the consumer proposal, we offer 2 financial counseling sessions. So the first counseling session, we talk about rebuilding, money management, things like that. The second counseling session, we focus more on which credit cards you should apply for in terms of getting your credit score back up. So during the proposal, you do have to rebuild. So for people who already have properties, a secured creditor, it's convenient for them because they're already making payments that already triggers to the credit score. So I would normally start off by letting my clients know to get a secured credit card. So that's where you put in a deposit and that's there, and then you eventually use that. And then they'll eventually unsecure it and make it into like a regular credit card that you've had in the past. In a bankruptcy, I wouldn't recommend having any credit during the duration because sometimes the creditors can oppose. And if it does oppose and we do have to go to court, the judge might not like that. So I normally advise all of my clients who do file a bankruptcy to obtain do not get any credit until you get your discharge.
I mean, I think the likelihood of any
And
lenders or sorry, any banks approving somebody with that
is
credit
very,
is
yeah,
probably rare anyways.
yeah.
So Keith, there are many signs of insolvency, right? Like tax arrears, maxed out credit, refinancing to pay off debt, and just the repeating cycle. Which ones do you often see most?
So now there's been a mixture of all the ones that you've said, but the most common one is maxed out credit cards. It's just that clients just you put money on, use it, max it up, put money on, use it, max it up. So it's just like a revolving cycle that they never can get out of. And the second one I would say that's pretty much common to that is tax arrears. So there's a lot of people who are behind on taxes in terms of director's liability, source deduction, personal taxes. So I would say those two are the runner-ups for the most of the clients that we're receiving now, but those are debts that do get taken care of in a consumer proposal or a bankruptcy.
CRA debts and OSAP loans. Let's talk about that. Can both of these be rolled into a proposal or bankruptcies?
Yes. So a lot of people don't think that it can be. So CRA debts definitely can be, unless you owe for like child support, like FRO or something like that. Those are court ordered, so unfortunately they can't be included. But OSAP debts, yes, they can be as long as you've been out of school for more than 7 years, it will be dischargeable. So once you finish the proposal or the bankruptcy and you've been out of school for more than 7 years, that debt does pretty much get wiped off.
So
Yeah.
that's something new I recently learned from your presentation. So thank you. How can mortgage brokers and insolvency trustees work together so clients don't lose their home or long-term home ownership goals?
I would say by early planning. So while we're speaking to the clients and going through the option of a bankruptcy or a consumer proposal, they should also be speaking with the mortgage broker to see if they can take out any funds out of their house, what the next step would be, if they could take like a HELOC out. So in terms of that, I think that would be a great collaboration for mortgage brokers and insolvencies. And I really like getting files from mortgage brokers because I know that avenue's already been exhausted, so I don't have to refer them to anyone. So I would say just start off by planning early. When they're speaking to us, they should also be speaking to a mortgage broker as well for those who do have
Yeah, I
properties.
think Cajun also recently referred a business to like the insolvency side, and I'm not sure if it was yourself or just gave that advice to the client. But we did a refinance last year, and they're back to where we were a year ago.
Yeah, it was me. And
Yeah,
I, yeah.
yeah, and I just looked at the deal and I was like, "What are we doing here? I
Mhm.
don't even know how to sell the story because it doesn't make sense,
Yeah.
right?" So I didn't know how to write up a good story on like we're doing an injustice to the client by
Mhm.
continuing to put them back into a
In the
private,
same,
right?
yeah.
So this made the most sense. Like, go figure out if you can do a consumer proposal, do the consultation,
Yeah.
and then we'll come up with a game plan, right? We'll
Yeah.
get you back. This way you get to keep your home, right?
Yeah.
Because right now you can't get
You
out of
can't.
this,
Yeah.
right? So
And honestly, like at the end of the day, like, is it worth keeping your property if you can't pay your mortgage, you know?
yes,
So
right.
sometimes I know it's good to have a property because it's an asset that you have in your name, but at the same time, I have told clients like you need to walk away from your house,
Yeah.
like if you're going
It's a
sinking
tough pill to
underwater.
swallow for sure,
Yeah,
but it's somebody needs to say it, right?
exactly.
What's one message you would share with someone listening today who is drowning in debt but terrified of the words proposal bankruptcy?
So yes, those words do sound scary, but honestly, make that phone call. Like if you're just borrowing from Bill to pay Bob and you can't pay anything and you don't have anything left, I would say make that phone call if that is you. Because honestly, you would save so much. Because at the end of the day, what you're paying now is just the interest, right, on your credit cards. So in a proposal, all the interest freezes. So and you just have one payment. So why not do it now? Why wait?
Yeah. So insolvency isn't the villain you guys think it is. If this episode resonated with you, we're coming back into the new year with a lot of debts because, we're always trying to keep up with the Jones,
Mhm.
right? So we're always trying to leverage debt and leverage money that we don't have. So if this is something that resonated with you and you need to seek assistance, right? We're here on the mortgage side and MNP Key is here on the insolvency side. And with that, we're wrapping today's episode. Thank you for watching.
Thank you, Vina, for having me today.
Thank you.